Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. Today is July 28th, 2019, and this is the uranium sector review. I'm going to start by going through the URA ETF from multiple time perspectives and then go through the various stocks in the sector from a daily perspective, unlike the previous videos that I've shared with you, which have been more or less from a weekly perspective. I feel given the recent turbulence in the market, looking at a shorter term view would be very helpful. And then afterward, I'm just going to share some personal thoughts. I feel like these thoughts can be very, very important lessons for all of us in terms of how to become better investors. So let's take a look. So starting with the URA ETF monthly, you see we're in this falling descending wedge, and every time we've hit this particular trend line, we've fallen back, and now we're right around that support around that 1050 area to 11, and we need to either break out or break down, and right now it looks like we're breaking down. So we still have some time left this month, and I would like to see a positive couple of days over the next three to four trading days. The weekly, same thing, and here you see the double trend lines of support, and I think that we can even extend these lines to here, but around that 1250 area is really crucial support. We must hold that area to avoid descending into a very, very large bear market for uranium. I don't think that's going to take place, but anything is possible. And what the charts are showing is that right now there's tremendous weakness. Obviously, there's tremendous pessimism in the FinTwit area, and this could be a great opportunity or the start of something much worse. So I don't know what to tell you. Obviously, the due diligence from a lot of the guys in our community has been really, really good to suggest that we are at the precipice of a very nice bull market in uranium. But so far, the charts are not showing that. Here's the daily. So the daily was a total breakdown, and we're in very, very bearish territory right now. And that's why you see when you break below 30, that's when you see some of the biggest declines, and that's sure enough, that's what we saw, and it was a very quick decline. So I want to see what happens here. Do we bottom out here and then break back above that 1130 area, or do we stay here for a while? The longer we stay here, the more likely that of likelihood of further declines. So we'll see what happens. But the uranium participation chart, which is basically the best tracker of uranium price that I can chart, shows a different story. It shows that we are on the verge of a breakout in prices, and so we'll see what happens. But you've got the URA breaking down, and you've got the price of uranium bottoming and breaking out. So if this can continue going this way, I think that would be a very positive development. I want to see a break above the 50 RSI very, very soon. Finally, here's the weekly chart, and you see that we're in kind of a cup and handle formation. This is a bullish flag here, and I think we're setting up for a move towards that 553 level if you just extend this particular line. So we tested the 50 area, we fell back a little bit, and I think we're gonna head higher. But last couple of weeks we saw slight declines, but this is setting up, in my humble opinion, for a move to the upside. So how does that impact the uranium price? We'll have to see. All right, so here are the individual names again from a daily perspective. Some of them, frankly, don't show anything. These names, like ALX Uranium, that have just been consolidating, it's better to look at longer time frames. So I'm just going to bypass those. Okay. All right, so Anfield Energy. This is just going to show you the trend lines right now that are taking place. Obviously, we've fallen from a high of 54 to a low of 15 cents. So it's been a pretty nasty fall. Every time you've hit this trend line over here, it seems like that's been a time to sell. And now we're hovering around that 38 level of RSI, just around 40 right now. We're hovering above this 15 cent support level. And on the one hand, you might say that this is a bearish flag. So if this breaks lower, I would expect this to resume its downtrend. If this can continue breaking higher and potentially even break above the 50, then that would present a positive direction, because this could be a bullish wedge, or this could be a bearish consolidation, and a further breakdown. So I don't have a strong opinion on this particular one based on the chart. I'm just showing you what I see right now. I do like the fact that you've got the PPO moving in a positive trajectory. I don't like the fact that there's frankly no real accumulation taking place according to this particular indicator. So I like to see positive accumulation even in a basing pattern, and I'm not seeing that right now. So we'll leave it at that. Appia Energy, it's still in a bullish consolidation right now, and this is one of those charts where there's nothing happening. If you own it, there's no reason to sell. If it breaks below this point from a technical perspective, that's when you would sell. If it breaks above this particular trend line, that's when you would buy. Azincourt Uranium, likewise, this one's interesting because it's PPO is moving in a positive direction even as price is falling. You see that there is accumulation taking place, so that's a very positive sign. You know that they're doing some drilling right now, so there's a possibility of a positive catalyst. And every time it seems to fall in this area, it seems to rally. We'll see. I mean, it's hard to say on a thinly traded stock whether one up move is sufficient for a resumption of the trend, or rather a resumption of the uptrend. But right now, this is a positive development. It needs a couple of days. I think a close above 4.50, 4.5 cents rather, would be very positive. But until it breaks above that 4.5 cent level, this is just a fundamental play if you believe in it. Blue Sky Uranium. This one's interesting. So this one has been hit from a high of 22.5 cents to a low of about 13.5 cents, and it's a very well defined bullish triangle and bullish wedge, and it looks like it's bottoming right now. You see a consolidation in a positive direction for PPO. You see that even as we're going towards lower prices, momentum is slowly starting to build a positive divergence, and that's very, very important. Should this break to the upside, that could lead to a very nice move initially to 16.5, and then eventually towards that 22.5 level. This is an Argentinian play, so that could be an interesting diversifier in your portfolio. But obviously, as with all these names, please do your due diligence. I mean, a lot of these names, most of these names, I haven't done my due diligence, and I'm just showing you from a technical perspective. So again, this is for educational purposes. Don't use this video or these videos as your exclusive reason to buy or sell a security. Cameco. So Cameco obviously broke down. Every time we've hit this trend line here, we've fallen lower. This is the importance of technical analysis. Every time we've hit this particular trend line over here, we've bounced until here. We've fallen below that. Now, what I will point out is that there is a positive divergence where price is at a much lower low right now than earlier in May, but momentum is not reaching those lows, and which suggests to me that this could be a washout play, and we might find a snapback rally all the way back to 10 in short order, and that's precisely what I would like to see, what you would want to see if I'm correct. So if momentum needs to break back above this 31 level of Fibonacci RSI, if it breaks to the upside, then that's what it'll take to see this move back to 10, and then ultimately back to the top of this trend line. And that will suggest that indeed the sector washout is complete. But until this trend line breaks to the upside, there's nothing technical there's no technical reason to own this particular stock. Canalaska, not much to see. I mean, every time we hit this trend line here, we fall lower, and that's where we are right now. We're struggling breaking above the 50 RSI level, which is a very strong resistance. You wanted to see PPO was moving in the positive direction, but as often happens, just as you're about to break zero, we curl back lower. And so it might take a few more days, but it needs to break above this level to give you any reason to own it from a charting perspective. Deep Yellow. This one also, this one's interesting because even though it's close to its lows of 22 cents from a high of 41. in August of last year, momentum momentum is rallying quite a bit. Notice we're close to the lows, but we're just going higher and higher in momentum. Now we're kind of rolling over right here. So it needs to hold this 50 level. We're slightly below it. It would be great to recapture it. But you got PPO closing below zero on the daily. So it's very possible retest those lows at 22. I will point out something just in my technical analysis that can be helpful for you in all your charting going forward. Notice what happened here. This is the 69 level of RSI, and that often serves as resistance. But another point is this is also the last time right here that we broke down from highs, and that's going to be how in price levels there can be strong price levels of support and resistance, right? This is obviously 22 cents has been a level of support rather. Well, RSI, it's even more crucial. Momentum, where you see a breakdown in the past, which is what we saw here from highs, is precisely, if you just draw this line like this is where you saw the breakdown. So this RSI point of resistance is going to, or breakdown is going to serve as resistance going forward. And that's what we saw here. So we retested that level and we couldn't break higher. And now you see some weakness. So I'm watching very closely to see what happens here. Denison, like the major juniors that on this watch list, has been weak ever since it broke down from this technical triangle. And again, technicals matter, and this is why. Because a lot of folks were expecting this to break to the upside. It was a fake breakout, and when a fake breakout breaks down, this is what happens. And this is a washout. You see the technical traders get out, and it creates a momentum play to the downside. Now we're below that 31 level, and let's see if it can manage to break back above the 45-cent zone and perhaps stage a rally. Nothing else than just to back test this particular breakdown level. But right now, there's a lot of weakness, and that's frankly all I see. Encore Energy, on the other hand, is at a very interesting place because it's at support. And as a trader or as an investor looking at charts, this is the great opportunity to add or initiate a position because it presents a great risk reward entry point. So you've got positive divergence, slightly higher highs in momentum, despite slightly higher lows in price. You're at support, and this just presents a good risk reward entry. With a stop loss, I would say below 9.5 on EU.V, so this is Canadian prices. And so the downside is relatively limited technically, and the upside, if you're right, it could be back to a break towards the high end of this particular trend line, or perhaps even higher as it builds momentum. So this is an interesting fundamental play, and from a technical perspective, it's just setting up real nice right now. All right, so you'll see that some of these American-based plays right now are very interesting from a technical perspective. This one, Energy Fuels. This is the U.S.-based ticker. EFR.TO is the Canadian, and so this one is basing right now at multiple levels of support, and it's basing with positive divergence. Notice lower lows in price, but momentum is going ever slightly higher, and we close the week right above that 31 level, and that's very, very important. If it can follow through on Monday, which I believe it will, because Fridays typically are never, if a stock is down on Friday, typically there's a follow through on Monday and vice versa. So I think on a Monday there is going to be a follow through, and we may stage a strong rally. I still expect there to be a test of that 2.3 level. So from a technical perspective, this is a good opportunity should this break to the upside. From a longer-term perspective, what it does here would be very important. Can it break above this level? Can it break above this downtrend that's been created in RSI? Time will tell. But right now, there are some positive developments. You see some accumulation taking place. See PPO starting to move in a positive trajectory. So I like the setup, at least in the short run, for energy fuels. Fission 3.0, this is one of those speculative explorers, and it was on the verge of breaking out, and it tried, and it couldn't quite maintain this particular trend line breakout, and then folks just got impatient and started selling off. So from my perspective, it's very interesting that it was trying to do this despite the uranium sector really giving back most of its gains over the last year and going to new lows for some positions. This one is starting to do well. They've got a number of exploratory programs, and so this could be an indication that someone's picking up these shares with expectations of very positive results. No guarantee that those occur, but so now it's pulling back. This could be a good opportunity to add here, or it could be breaking down to lower lows. But we'll have to see. Fission uranium broke to all-time lows here in just last week, and very oversold, and that was one of the reasons we had this major washout here. But it bounced back nicely on Friday. If it can follow through and get back above this downtrend line, so then it can make a nice run to retest the 46 level before kind of reassessing what's going on from a fundamental perspective. Right now, this is a technical play. So long as it's below 31, this is bearish. If it can break above this trend line, above 31, then it's going to create a short-term trading opportunity. Forces Metals. This one is similar to Blue Sky in a very interesting and very clean bullish wedge pattern. So obviously from 27.5 to 15 has been a nasty decline, but if it can break above that, and notice it's been holding fairly strong with momentum, and despite these new lows. So if you can break higher and break above this wedge, it can present a very nice trading / investing opportunity in this particular name. And notice again here, accumulation has continued to be strong despite the decline. So amateurs are selling off, but these sell-offs are being purchased by patient investors, and that's what you want to see. Global Atomic. So this one, based on what I've been reading from the fundamental investors, has very good fundamentals. However, from a technical perspective, it's breaking down. It's breaking down from a weekly as well as a daily perspective. And this right here is the momentum trend line, and it broke lower. So price has not yet broken, but momentum has. So if price breaks the 51 cent level, I could see this have a flush down towards that 44 cent level. So this could be a good opportunity to add or initiate a position if that occurs. So keep an eye on this one because it's showing some pretty considerable technical weakness. WX Uranium, speaking of technical weakness, this one is interesting because it's got this rounded base, and now it had a cup and handle here, and we broke out of this cup and handle, and now we're kind of back testing right here. So it's fallen pretty hard, but if it can maintain support around 14.5, then this could be a very positive sign that the back test holds and we move higher. But you want to hold this 38 level of RSI. It's very, very important. This is the last time that we rallied was around that 38 level. So now we want to make sure to hold that level. If it breaks below 14.5, then you're going to see a move back down towards 12.5 area. But I think the probability is probably 75% that this particular level will hold. ISO Energy, another one that was in a bullish or rather bearish bearish wedge going up in a coiled pattern, but creating lower highs in momentum. So negative divergence, and once we broke below that trend line, then this caused a pretty nasty drop in the short term. So now we found support at the 50-day moving average here and at the blue line, and we found a bounce. But unless we can break back above this downtrend in RSI, we will, or the shares will likely have some weakness. But consolidation here is not necessarily a bad thing. I think you want to consolidate between 45, I would say 45 and 54 for a couple of weeks, if not a little bit longer, and regain some of these technical strengths before moving higher. Laramide Resources. So this one's interesting because this one was hit perhaps as hard as any name after the 232 decision was handed out, and we broke below this particular uptrend that it was in. This was kind of the bullish flag of the cup and handle, and we broke below it, and now precipitated a nasty fall, 35 to 24. And right now, but there was a very nice snapback rally from deeply oversold to a test of 38. Now we're retesting that 31 level, and and this could be a very, very positive back test here. So I'm curious to see what happens. Does this 24-cent level hold and we break back higher to test the 50 level, kind of more like a cycle pattern, and which would coincide with a move towards that 31 cent area. We'll have to see. But right now, this positive development where you back tested on price, but momentum hasn't jumped deep into oversold levels again. So I'm going to be watching this one very closely because this has some of the best perspective fundamentals in among the explorers. Next Gen Energy, this one got hammered hammered lower. It appeared ready to break out here above 176, and it had positive divergence with price, and it was a fake breakout. And once fake breakouts happen, you're going to have very sharp declines because the people watching this from a technical perspective, frankly, they got out. And you saw this uptrend broke to the downside, so that was a stop loss. Stop loss is being triggered, and when we broke below 50, that precipitated more selling. But bottom line is, right now we're testing a breakout from the upside, and over here this trend line, and now it coincides with that 38 level of RSI support. And so even though we broke from a price perspective, we did not break from a momentum. That's a positive indicator. I would expect if there's a rally in the near term, snapback rally in uranium miners, this is going to lead the pack and perhaps could make a run all the way to that 165 level. So there's some nice upside from a technical perspective, but I want to see this break back above that I would say 145 level before that play is confirmed. The bottom line is NextGen is in a uranium, if you will, renaissance. If once uranium breaks to the upside, this is going to be a leader, and this can see double-digit prices potentially if uranium does run to 40, 50, 60 dollars an ounce. Paladin Energy, really not much to see. It's consolidating here in a rounded fashion. If it can break and sustain above this 11-cent zone, then this can really run hard towards 19. It's consolidating right now above the 50 level, but it can't seem to break higher. And so if it breaks below the 50 level, then it can have lower prices. But notice the accumulation that's taking place is very positive right now. So that's what you want to see. And so this could be an opportunity just to initiate a position here with a very, very well-defined risk below 10 cents. And then with obviously returns at 19 cents, if not higher, to 35 in a renewed bull market in uranium. Couple more charts here. Plateau Energy Metal. So this one, there's not much to say from a technical perspective other than it broke down really hard on Friday. There was some fundamental news, and we're waiting to see what the company says on Monday. There were some mining rights that were lost, and if this could be very impactful to this name. So from a technical perspective, this was a very bullish chart, and it broke down. When it broke down below this level here around 61, perhaps that was your first sign to sell your position from a technical perspective. It was a technical breakdown, and then to me, this is insider trading. People knew that there was going to be a negative news report coming out, and they started selling off here. And bottom line is, if the company can't reassure investors, this can get ugly on Monday. On the other hand, if they can reassure investors, there can be a nice snapback rally. But right now, there's nothing in the chart that's positive from a daily perspective. PurePoint, same thing. This one was consolidating very, very nicely. We broke above this downtrend, and then kind of fell back lower in a technical breakdown. So unless there's a catalyst in names like these, in these speculative explorers, there's really there's just going to be consolidation to the upside, consolidation to the downside, and now we're at the downside at 6 cents on the Canadian. Look at the accumulation. That's what I like to see. And so this one suggests to me that at some point there can be potentially a very nice explosive move to the upside with a nice catalyst, because someone's buying and buying very, very hard. Sky Harbor, this one broke down below 31 cents, but it's maintaining positive divergence right now. So if this can break back above that 31-cent level, I think that this one will be fine. This, like Fission and like NextGen, they've got some really good resources in the Athabasca region. They've got some really nice management, and at some point in a uranium rebound, this one will hit new highs, 42, 56, and perhaps way well beyond. But right now, while uranium is in the dumps, the stock is in the dumps as well. Here's UEX Corp. Broke down below this trend line, and now typically when you only have two endpoints, that's not a strong trend line. You want to see three endpoints, like you see here. That's a strong trend line. 1, 2, 3, 4, 5, and once we broke above that, that was a very positive move. It's not a strong trend line, but from a RSI standpoint, right now, this could be very strong support. It needs to maintain these levels around 15, and if it can, then this could be a bullish wedge that eventually it'll break out from to the upside. But right now it's showing weakness. I love the accumulation here that's taking place. So that gives me confidence that even if there's lower prices, I think that over time that this is going to build a strong move to the upside eventually. There's your energy, URG, just like Energy Fuels and Energy Fuels and Uranium Energy, which we'll see in a second. It's been hit after the 232 decision, but it's shown positive divergence. You see momentum did not make new lows despite the new lows in prices, and I think we're setting up for a snapback rally, perhaps to 74 cents, and which might get us back to these resistance levels. So in the short run, I like the technical perspectives. In the long run, fundamentals will play out. So we'll see. Uranium Energy, same thing. Positive divergence. Well, you had a slight new low in momentum, but it quickly recaptured that. It closed the week above the 31 level, which is very positive, and it needs to break above that 102 level, 103 level to confirm, and then at that point it can make a run towards that 125 zone. But until that happens, it's still very technically weak. And Western Uranium, this one also is very interesting. It's, as I showed you with ISO, I believe it was ISO Energy. Perhaps it was another name. Anyway, this is the RSI support and resistance. Last time when we broke out of this downtrend was right around here, and that coincides with the 31 level. We're back to that 31 level right now, and it's serving as support. It served as support here, and it potentially can serve as very strong support here. If those levels can hold, look at the accumulation that's taking place. That would be a very positive sign, and this could be a great opportunity to add or initiate a position, because the upside could be really, really nice if this 31 level does hold. So I'm watching this closely, and if it can break back above around $1, then that could be a very positive indicator for what's to come. Overall, guys, I just want to point out just my final thoughts. I mean, I've shared them on Twitter. I want to reiterate them for those who didn't see my messages. What's taking place in the uranium sector is a great example of a sector that a lot of folks have fallen in love with, and they've invested heavily in individual names in one jurisdiction, in one country, in one sector, and they've under diversified. Some folks have bought just one company, and I've experienced this before. I bought one company that I believed in, and I lost everything. And so it's very, very important to diversify among not only one sector. You want to diversify amongst multiple sectors. amongst multiple asset classes, amongst multiple countries, geographic regions. So what happened with Plateau Energy on Friday, we'll see what happens, but it doesn't impact you considerably. Yeah, it hurts if you own it and you just dropped the entire position can go under. But if that's only 2% of your portfolio, it's going to sting, but it's not going to kill you. And that's what you want to avoid in investing for the long run. And you want to avoid investing in one sector, because right now precious metals are breaking out and you're seeing 100%, 1,000% return potentially in some names, and you're stuck in names that may see those down the road, but you're stuck in names that aren't doing anything right now. So it's very, very important not to fall in love with any one company in any one region, in any one sector, in any one asset class, because sometimes stocks won't do well for a long time. You want to be in real estate, or you want to be in bonds, whatever the case may be. So anyway, Moniology.com, which will be launching in the next couple of days, hopefully weeks, perhaps at the latest, hopefully will be that resource for you guys to be able to help educate and help guide you in your toward your investing success. I appreciate all of you that have supported my videos so far. Videos like this will become premium because I'm investing a lot of time and personal capital to build this website out for a resource for all, and it's going to require your help and support. And I appreciate those of you who have pledged your support to become premium members. So far, we've got about 50, 60 people, folks all across the world who have pledged their support. And I'm opening this for the first 100 folks who sign up to the premium service. It's going to be $37 a month and discounted annual rate. But after that, it's probably going to increase toward $50 a month. So if you want to be part of the first 100 premium subscribers, premium members of the community, then shoot me a note at dave@moniology.com, and I look forward to having you part of the community. Thanks for watching, and have a wonderful week.